Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Well, welcome to another edition of the ASB Investment Podcast. It's your home for understanding all the key financial topics, market movements, and policy announcements going on right now, alongside a sprinkling of life advice and the regular book club recommendations. All of it's designed to help you grow your knowledge and confidence, whether that's as a saver starting out, right through to being what you could class as an investor. I'm your host, as always, Nigel Grant, and today we're diving into the world of financial markets, but we're starting at the shallow end of the swimming pool. Think of it like the tadpoles class at your child's swimming school rather than the sharks or orcas. As such, all the analogies are always my favourite part. We're going to help you understand a little bit more on markets, what they are, how they work, and why understanding them is essential to managing investments like KiwiSaver and investment funds. So joining me to discuss this is our investment strategist and investment committee member, Mr. Frank Jasper. Frank, good to see you again. How are you?
Look, very good. I'm glad to be swimming with the tadpoles rather than the sharks. Makes me feel a lot more comfortable. So, yeah, lovely to be chatting, Nigel.
And we've had you on before, but for those tuning in for the first time, can you please give us just a brief background on who you are, your experience, and what you do for us at ASB?
Yeah, thanks, Nigel. I've been lucky enough to be I'm going to use almost work off that shark analogy. It's circling financial markets from lots of different perspectives for longer than I care to admit, the last 30 odd years, right from managing direct portfolios, so buying and selling shares and looking to grow wealth through that, to managing total big multi-asset portfolios, and ultimately as Chief Investment Officer for another major New Zealand financial services firm managing over $15 billion. I'm lucky enough to work with the ASB team primarily on the investment committee, really overlooking and oversight of our big investment portfolios, and helping grow wealth for hundreds of thousands of Kiwis.
So first off, I guess we're going to get back to use that analogy in the shallow end of the pool, the 101. Taking things back to basics and discussing what we may mean by things like the S&P 500 or the NZX 50 or whatever number plate sounding acronym we're talking about. I worked it out. It's a very number plate S, numbers and letters all just together, squished together. We know them as financial markets, but Frank, what exactly are they and why do they exist?
Yeah, so if we're going to keep working on a lot of analogies today, but imagine a world with no supermarket. I'd have to walk down the road to find the person that grows some tomatoes and buy some tomatoes from them, and then I'd walk down to the local farmer and maybe buy a piece of beef off them, and then I'd walk to whomever it is that produces the other things I need, maybe the toilet roll manufacturer, and buy something off them. Be super inefficient, right? Turns out that having all the stuff we want to buy in one place with the rules of the game established, someone that's providing a trolley for us, is really helpful. Financial markets are just the financial version of exactly that they're a place that buyers and sellers of financial assets, and we'll talk more about those and what we mean by those later on, but they can congregate, they can buy and sell, the rules of the game are established, and it's just a really efficient way for us to change the ownership of financial assets. So really just a meeting place and a marketplace like many others that we use in our lives.
And is apart from kind of that supermarket analogy, or, I was just thinking, is that like medieval times? Maybe I had to walk around from markets to, maybe it's like a farmer's market that exists now. But, I guess aside from that all in one place, are there any reasons why these markets even exist outside of that?
Yeah, so if we look at from a pure financial market point of view, it's providing opportunities for companies or to raise new money from investors that they don't know. So let's say we start a business off, we're doing really well, we're growing it in our local community, but we think we can do more and grow it within New Zealand, we can go outside New Zealand, but we need more capital to build the widgets that we're selling. Well, financial markets are one tool that we can use to raise that additional capital, get other investors on board, and to help grow our business. So that's the primary purpose of markets. Once those shares are being listed on that market, though, people may want to buy or sell those shares. And again, it provides that congregation place for people to buy and sell those fractional ownerships of companies called shares in an organised marketplace. So a couple of kind of core reasons, but raising money and then changing the ownership of a company or a bond issue as investors change their opinions in their portfolios.
So to build on this a little bit more, how does something like our company that makes widgets that you and I are now running, and we want to go bigger, we want to have our faces all over TV, and we want to be selling more. How does a company, how does a company end up on a financial market?
Yeah, so if we think about, and there are different markets for different types of financial assets, but if we think about companies raising share capital, so looking for new partial owners of their firm, they would typically go to their local share market operator. So in the case of New Zealand, that's the NZX, and they would list their company on the market. What does that mean? Well, it means that they can use the market to raise more capital for their firm. So if it is this famous widget manufacturer we're talking about, use that money to produce another factory, or to hire a marketing team in a different country, or a sales team. So to use that new capital into their business to grow. By signing onto the market, they abide by that market's rules. So there's a whole series of rules called the listing rules that this company would now have to abide by. There's a lot of sort of work to get to that point. But what that does is it gives investors confidence that the company is appropriately run and managed on their behalf. So markets provide that really important kind of hygiene factor that gives investors confidence that their money is going to be well looked after by that company. Now, that doesn't mean that every single company is going to be successful, but it means that the rules of the game, things like being audited, having a proper board in place, all of those sorts of rules are established by the market that they list on.
And that's, I guess, that's what's meant by a company is public, but not all companies have to be, I guess you're not obligated to be public when you reach a certain size. You can also just stay private, correct?
Yeah, so again, the rules of this get slightly complicated depending on how many shareholders you've got, and it changes the rules that your company is managed under. But yeah, it's very legitimate for a company to stay private, to have one or two key shareholders only, and they can grow to be very large like that. There's some very famous private companies around the world, the massive companies like Lego, still private businesses owned by a family in their home country. But for many, many companies, that option of listing on a share market and raising capital in the public markets is very attractive. For other companies, they pursue another route and stay private for a long period of time potentially.
Now, to bring this back to ASB, and we've touched on companies, why they list, why they may stay private, I guess. But can you explain to our listeners how we at ASB, how do we use these financial markets and the companies within them with respect to our investment products?
Yeah, I love the way you've asked that question, Nigel, because for me as an investor, markets are just a tool to help us buy and sell into assets that we want to own for very long periods of time. So you can almost hover out from that question and go, why would you want to own company share in your portfolio? And so if we think about the way we build our portfolios, they've typically got some company shares in them. They've typically got some government and company debt, and we can talk about that in a bit more in a moment. They've typically got some cash in them. They may have some property or infrastructure type assets in them as well. So we're looking to build portfolios that have got different types of assets with different characteristics that over time will help grow people's wealth and will create a diversified exposure to different sorts of return profiles. That all sounds quite complicated, but why we're using markets to do that? It's just giving us access to really good quality companies that we can invest in around the world. Why would we want to invest in those companies? Well, if you look at the history of markets, of share prices, of companies, ultimately companies that are able to grow their profit streams over long periods of time enjoy higher share prices. So by using markets as our tool, by then investing in companies, we're able to access those cash flows and those growing cash flows that those companies generate. And by doing that, we're able to enjoy higher share prices over time and really good returns for our clients. So very much just a tool to enable us to buy things that are going to go up in value over time.
Yeah, and I guess sometimes I always reflect on the stock market, for lack of a better term, is a market of stocks. And sometimes I think we lose sight of that. It's a collection of companies or things as opposed to not this just one big faceless entity. It's actually, there's things going on underneath, and we want access to those things, correct?
Yeah, it's the chance to own part of some of the best companies in the world. So you as an investor in an ASB investment fund, you own part of Apple, you own part of Mainfreight in New Zealand, you own part of these sort of iconic companies whose goods and services we literally use each and every day. So it's not this kind of amorphous thing. It is this very practical thing you're doing is you're buying a part ownership of some of the as I say, the favourite things in your life, the favourite products that you use, you become a part owner of those things, and that's ultimately what drives the value of those companies, and then ultimately what drives their share prices higher.
And before we get into kind of what makes this market of companies or things go up and down and move, whether that's individual companies or the whole group as such, just quickly, what is meant by when I own things passively versus actively? What's the key difference there? Is it I own the whole farmers market that we go to, and I'm not determining between what, or is it am I picking specific things?
Yeah, and I think we will use that farmers market analogy. So we're going to create a soup with many, many flavours. We're going to own a little bit from everybody's stall, and the biggest stalls, we're going to own more of their things than the smaller stall in the market, and we'll just own a bit of everything of that. And the logic for that is that whatever happens, we'll go okay. So we'll own a bit of every single company. Some of those companies will be wildly successful. Some of them will do okay. Some of them won't be very successful, but we'll participate in all of that.
Sure.
An active manager is like your gourmet chef going down to the farmer's market and trying to find that perfect little bit of steak for their degustation menu, or the best vegetable on display. Sometimes you get that right and you end up with something that tastes amazing. Sometimes, a little bit like when I'm cooking, it doesn't work out quite so well, or it probably doesn't taste quite so good. So active management's all about being really selective and trying to pick the very best. Passive management saying, okay, that's pretty hard to get right consistently. I'm just going to own a bit of everything and get performance in line with that broad market.
And so from that to kind of what makes things move, I guess, whether it's up, down, things do move. That's a fact. It's part of financial markets. It's not like sort of a static, nothing's static, as we know in financial markets. But what actually causes these ups and downs, and that affects share prices, but ultimately balances that customers see in their, on their account?
Yeah, I'm going to start this answer by sounding kind of a bit ridiculous, but I'll explain why this sounds a bit ridiculous as I go. In the very short term, the answer is none of us really know exactly what moves prices around. In the longer term, there are some really clear drivers that are very, very important for setting long-term returns for different sorts of assets. So what do I mean by all of that? Let's start with the long term. Ultimately, it is the success of the individual companies and the aggregate of those individual companies that will drive the success of that market. So again, let's think about what that means in practical terms. If we wind the clock back on the story of Apple, it's a company that almost went bankrupt. Steve Jobs left. The company almost went bankrupt. Steve Jobs got bought back on. They invented this thing called the Mac and the MacBook. They invented this thing called the iPhone. They invented this thing called the iPad. Many of us now own those products, use them on a daily basis, pay Apple a lot of fees as well as owning their hardware. That's a company whose profits have grown astronomically since the very, very dark days of their almost bankruptcy. As it turns out, that massive growth in profit has meant a massive growth in share price. So you can really align growth in the share price with growth in profits over time. And that is ultimately what sets the value of a company over time, is how much do those earnings grow. That's true when you start to look at things over quite long time periods. So 5, 10 plus years, that relationship is very, very strong. What drives the market tomorrow is a vastly different set of arithmetic. It's what people's kind of vibes might be about what those earnings are likely to look like. It's about tariff announcements. It's about what interest rates are doing right now. It's about, is the economy weak or strong or somewhere in the middle? It's about cash flows in and out of the market. There's a myriad of things that will affect the short-term outlook for a market and the short-term, I guess, kind of confidence or fear and greed cycle that we have right now. Also, when we're building portfolios, our focus is very much on that longer-term perspective, because that's the bit that's more predictable. We can make sound long-term decisions around it. That very short-term stuff is very unpredictable, very hard to consistently know what's going on, and not a really good place to find your edge as an investor.
Yeah, no, I always go back to, this is one of those famous quotes. I think it's Mr. Buffett said, in the short-term markets are a voting machine, right? People vote with their feet and they're in, out things, but in the long term, it's a weighing machine, and it weighs the things that return things to shareholders, or those earnings in totality, that's what will drive markets in the long term. But in the short term, it's either head for the door or in or out that door, sometimes just like that.
Yep. No, absolutely. And that was Ben Grant. It was Warren Buffett's teacher when he was at Columbia. But look, it's a great quote and so true. The challenge for all of us, and especially as we're learning to become more comfortable with markets, is the stuff that hits the newspaper, the stuff you'll see in your Twitter feed, the stuff that people are talking about is almost all that very short-term stuff. The long-term stuff, it very rarely gets talked about, and because it makes a great story 10 years down the track, it doesn't make a very good story at the time. And so the things that I think successful investors focus on are not the things you would think they focus on. They're quite different.
And so with all that noise going on, and there's the financial media is, it's a business in itself. Its job is to keep you clicking, watching, tuning back in. So you can't fault them for that. But with all that going on, how do you manage money through that? Is there any key secret or trick?
No, it turns out in life, if there was a key secret or trick to it,
everyone would do it.
We'll know about it by now. But yeah, absolutely. But look, and also I'm an absolute junkie for that news cycle. It's really interesting. It's great to try and understand what's going on. For me, the trick or the challenge is to kind of parse that information into hey, this is really relevant and has a potentially long-term effect on the profits and earnings that a company or set of companies could make, or this is interesting but only a very short-term likely effect on markets. So you'll hear commentators talk a lot about, is the Reserve Bank going to drop interest rates by 0.25% this week, next week, or next month? That's interesting, but ultimately it's not. The small moves like that are not fundamentally going to change the long-term economic outlook for an individual company or set of companies. So I'll pay attention to that. I'll be aware of the impact that has on market sentiment and mood, but ultimately that's not going to drive my long-term perspective on what those companies are worth. It's just quite short-term. So it's really trying, and this is harder, easier to say and harder to do, but it really is trying to figure out the things that have long-term relevance that we'll still be talking about in 5 and 10 years' time versus the things that we won't be talking about in 5 or 10 years' time, and paying attention to the right ones.
I guess it's separating noise from, and I don't even know what the opposite of noise is. Noise from whatever.
Signal. Noise
signal.
From signal.
There you
noise
go.
From signal.
Yeah. And so,
yeah. But again, it's easier to say than do.
Yeah. And the other thing I just wanted to touch on is, I'm just seeing which of us can weave in the best farmers market analogy, but, what is the diversification element and the benefits of that? Why do we diversify when we're picking things for our savings to try and that are going to grow our savings?
So we all love the idea that we know the future and that we are the best predictors. We know which markets are going to go well. We know which companies are going to go well. We know what the economic environment is going to be like. The fact is that none of us really do know that with any certainty. So the reason that we diversify is almost an acknowledgement that we don't exactly know what the future has to hold. Who amongst us would have predicted the COVID pandemic? Who would have predicted the second, third, and sort of tertiary consequences of that pandemic? So we diversify to acknowledge the fact that we don't entirely know what the future looks like. And by diversifying, we have different assets in our portfolios that will perform differently in different environments, and that provides a protection for us should the environment in the future be different than the one that we thought might play out. So it's really a way of managing risk, of acknowledging that the future will have many, many twists and turns in it, and building a robust portfolio that is well diversified is what is the best way of managing that diverse range of future outcomes that we could possibly achieve.
I always try and coach my daughter, who is Francis, not with an E, as opposed to, you, my friend, and about having a diversified friendship group. So it means that if one friend doesn't want to play with you at school time, you've got others you can go to. If you put all your eggs in one friendship basket. So I'm teaching her modern portfolio theory as an 8-year-old.
Yeah, I've never quite thought about it in that context. But I mean, you're right. It's if you think about many, many things in life, having robustness and the ability to pivot and move as circumstances changes is really important. Having a diverse skill base when we're going through school so that we know more than just one subject. We're learning this right now with tariffs, actually companies having a supply chain that's not absolutely reliant on just one trading partner is really important to building robustness. So that idea of building robustness into systems absolutely works for portfolios, but it's a much bigger lesson than just portfolio management. It's a life lesson, Nigel. We're getting much more philosophical now.
So with so much information and constant news coverage, swirling around again, it's easy to get caught up in that noise versus signal. So thank you for helping me work out what the second word was. But, are there any other ways that you, the ASB team, cut through that and stay focused? Like, who do we work with? Are there any other key partners we work with to help, focus on the long term versus kind of what's happening tomorrow or today?
Yeah, so I think for a start, working with the right team as you build your portfolio. And for those of us listening in, working with the right team of people at ASB or with your friends or with other people's opinions who you really trust, I think it's a really good way to get diverse views, ideas and opinions that are hopefully backed with some real judgment to them. So you just be careful about who you trust with that, but finding that team is really, really important. For us at ASB, we're really lucky to work with BlackRock, which is one of the leading global investment managers. And I think very importantly within that vast organisation, there is expertise on almost anything you could possibly want to tap into. So, literally world-leading thinkers in a lot of these areas working within that team. So that gives us actually some really good insight and kind of people to talk through things and really boil down to the things that really matter when we're building portfolios. So we're very, very lucky in that sense.
People can try and do this themselves. There's nothing stopping people from picking their own things and allocating to different bits and pieces. But I guess what's over your career, because you've even yourself just said on this podcast, we don't know everything. So I guess why is it so important to work with, key providers and experts, to help you get where you want to go?
Yeah, and look, my view is that a little bit of both is really, really useful to build your skills as an investor over time. Why do you work with experts? I think for the core of your portfolio, having that expertise, that experience, that knowledge and that insight to build that genuinely diversified global portfolio that will stand the test of time, that is the way to build your core portfolio. Now, I would always recommend that you work with a provider that's really keen to share their knowledge with you. So they don't just tell you they've got the secret sauce that they're not going to ever share with you, that you're sort of kept on the outside, but to work with a provider that does things like this, Nigel, that sits down and shares why and how they do things so that you get to learn more in that process. So I think a really good place to start is that core portfolio with a group of people that you really trust, who are really invested in your both financial success, but actually your learning as an investor as well. But I do think there is nothing quite like rolling up your sleeves a little bit. And I think you do have to do this in a measured kind of way, but you learn a little bit through experience in this. And look, I can share this from my own personal experience. Yeah. As you can imagine, having lived in financial markets for all of my life, I've read like hundreds, if not thousands of books about things like the Great Depression, other investors' successes and failures. Nothing really prepared me for the emotional journey that you went through in periods like 2008 and the global financial crisis, even though I'd read countless books about what it's like to live through those sorts of periods. And so the experience you get from living through them, frankly, making some mistakes, but learning from those mistakes, they all make you a better investor. So I think core portfolio with somebody like ASB that's got a really robust process and wants to share its knowledge, but then the odd thing yourself where you get to learn a little bit through trial and error, that will make you a better investor as well. So, and as it turns out, ASB can help you with that with ASB securities as well. But I think a bit of both works really, really well.
And to our final question, Frank, where we both give a recommendation, what's something you've been reading? Thousands of books. You might have one up your sleeve. They're reading, listening to, or watching that you could recommend to our listeners.
Yeah, and look, I think I'm going to use the famous podcast. I think we'll add a couple of links in the podcast intro here. But really, really good book called The Psychology of Money by Morgan Housel is well worth reading. I think it's a really good starting place. good quality journalism, despite what some people will say. I still think is really valuable. So the Financial Times, The Economist, those sorts of, I think really well considered publications are still really, really worth reading. And I spend quite a lot of time in the Twitter sphere on they call it sort of financial twit or FinTwit. There's some really good commentators in there. Again, you've got to be pretty careful to sort the wheat from the chaff, but there's some really good up to date thinking in there, and frankly, access to some of the world's best thinkers who are freely sharing their knowledge. And it's a world I never thought we'd live in, but it's amazing to be able to see and hear and think and see what people's opinions and views are, evolving real time. We live in a pretty cool time. Yeah.
My one was a book that you will have read, I'm sure, and it is by the person you mentioned when I said it was Mr. Buffett, and that's Benjamin Graham's The Intelligent Investor. Now, you'll probably say that's a very hard out book, and I probably wouldn't. Yeah. But at the same time, I always think it's a great place to start. Particularly, there's a couple of chapters in there around Mr. Market, and I think chapter 20, and there's another one that you could probably start with that have. It was written in the is it 1950s or 60s?
Yeah, maybe even earlier than that, actually. But yeah,
it's timeless things in there that I could. That is always the place I refer people back when they say, is there something I could start on? If you are serious about this, you'll read that book. My one I've read multiple times, and the pages are falling out, left, right, and centre. So,
it's definitely a must-read book.
Thanks to you, Frank, for explaining in simple terms what financial markets are and what they mean for all of us, and how understanding them helps you become a more confident investor, and helps us, it helps us at ASB make better investment decisions on your behalf as well. So, Frank, look forward to seeing you again in person soon. Thanks so much for joining us.
Very good, thank you.
Stay warm down in the South Island. It's a real South Island chill up here in Auckland. I'm sure you'd agree, which I always joke about.
Ski season on the way. We're getting excited. Yeah, very good.
And to you, our listeners, whether you're just starting out on your KiwiSaver journey or investing for the long term, knowing how markets can work can give you a perspective to stay the course, even when markets get choppy. So until then, happy investing and bye for now. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.